I look at crypto not as coins or tokens. I look at it all as software. It's productivity software. The projects that are going to last and be here, a decade away from now are ones that actually solve problems. So let's give an example. I'm an investor in Polygon. I'm a very fortunate guy. I'm able to call up the leaders of these projects and these teams, and they return my call, and I asked to meet them anywhere in the world. In this case, we met in Dubai with the Polygon team. I'm an investor in software engineers. I always have been. I've been in the software industry for 20 years. They're very, very strong, and their mandate, what they decided to do, is to try and reduce the cost by sitting on top of Ethereum and aggregating transactions. So the gas fees are a fraction of what they would be if you're doing them one at a time. I thought that was a brilliant strategy, and I made an investment in Polygon. The same with Solana, the same with Ethereum, the same with, HBAR. All of these are software, and they all have different attributes. If you're investing in, for example, in Google or in Microsoft, what are you investing in? You're investing in software. Why wouldn't you invest in crypto? It's software too. And in the case of crypto, just take, for example, Circle and USDC. USDC takes a lot of pressure and reduces fees in all kinds of different ways. And in the case of staking, gives you some kind of yield against inflation. So all of this to me is just software engineering, and I have a broad portfolio. I'm very familiar with the engineers involved in each of these projects. I support them. I'm an advocate for it. And the regulator is, in my view, going to eventually support these initiatives because of the tremendous economic enhancement and productivity they provide for the underlying economy. And as far as the US regulator is concerned, they have the opportunity to lead the globe in policy, whether it be stablecoin, whether it be Bitcoin, whatever it's going to be. And I don't think they want to give up that opportunity. They just want to get it right. And those of us that are waiting for their decisions are very optimistic, because you can look at this two ways. You can say, okay, the regulators are getting in the way of growth. That's one way to look at it. I don't look at it that way. I look at it saying, when the US regulator makes its policy, the floodgates of institutional and sovereign wealth are going to pour into these crypto assets. And I want to be well positioned before that happens. I don't know when it's going to occur. It's not a matter of if, it's a matter of when. And I'm very optimistic that they will take the lead and provide policy for global regulators. That's what I believe. The whole concept here, everything we've just talked about, is all software. I keep going back to that. I look for the best teams. I invest in their companies, I invest in their tokens, their coins, their currencies, but it's all just software.
What is your view on Bitcoin? Has your view on Bitcoin changed since you became a crypto advocate, and how?
Yes, I have a position in Bitcoin. It is not my largest. It is close. It's up in the top quartile, though. Ethereum is larger than Bitcoin right now for me. I'm a huge advocate for Bitcoin. I treat it as an asset, no different than a AAA office tower in Boston. It's an asset. I don't consider it a currency. Now, everybody has their own opinion. My opinion is it's an asset. So I hold it. I don't trade it. I do stake it. But the point is, I'm not selling my Bitcoin. The challenge I have with Bitcoin, and the whole industry has this challenge, is we've got to deal with these ESG issues. There's a lot of criticism around Bitcoin because of the amount of energy it takes to get a coin awarded. And in that area, I'm working very hard. There's lots of initiatives to create Bitcoin. And I'm not saying we're bifurcating the Bitcoin market, that one coin's different than the other. But if I'm a sovereign institution, and I work with lots of sovereign institutions because I'm in the indexing business, they would like to fund Bitcoin mining where they keep their own awarded coins, knowing with 100% certainty that they mine them in an ethical and efficient, sustainable manner. That is where a lot of the new capital is going. Now, whether that be wind or solar or nuclear or whatever, all of those projects are happening globally, and they're being funded by sovereign wealth because sovereign wealth has ESG and sustainability committees on top of their asset decision making. So the next generation of coins awarded are probably going to be held in perpetuity on balance sheets of companies that are funded to make them sustainable. And, that's one way to solve that problem. At the end of the day, I would argue that Bitcoin mining is at the forefront of efficient energy use. It really is. It's just that the rest of the investing world doesn't take that view. And there's been a lot of criticism of what happened in China initially by burning hydrocarbons to create electricity to make coin. And you've seen all of the controversy in the last year. Hundreds of millions of dollars have been earmarked and, in fact, put into the ground into projects that are going to be more sustainable in wind, solar, and nuclear, as I mentioned, in different geographies. That's the next big thing for Bitcoin. But why wouldn't I want to own that for the long term? I mean, I just think the long-term prognosis for that is to own it beside gold as a hedge against inflation. It's driven, I always believe the best ideas are driven by economic momentum. Some problem you're solving, some efficiency you're creating, some productivity you're providing, that gives you the long view. This is a great question because if you asked it just 60 days ago, I would have said the majority of the inflation that we see in the US economy right now is driven by the fact that the supply chain is broken. I have investments in over 30 private companies and I'm well aware of the situation we have right now regarding supply chain issues. So if you're manufacturing in the US, as we are in many of our companies, our supply chain is broken to lower cost components. So we're having to source them domestically at a 30% price increase, and we're passing that on to our customers. And that is why I would have said inflation was temporary. I don't believe that anymore. Inflation is now where it is in major commodities like energy, like gasoline, like food prices, because we have overstimulated the economy. We have printed so much money in the last 24 months. You can argue it was important to do that during the pandemic, but the pandemic is rolling on, as you know. It has luckily vaccines are helping manage it, but supply chains are still broken. But really what's happened is there was just too much stimulation. And as you saw yesterday, the Build Back Better plan is dead, and that's very good for the American economy because that was stimulation. That was going to be inflation on steroids. That was a very, very bad idea. And as a result, the check and balance system, it doesn't matter which side of the aisle you're on, bad ideas never make it forward. That was a bad idea. But now dealing with real inflation, it's going to put much more pressure on the whole system to find solutions, particularly for cash holdings. You're being taxed at effectively 6% if you hold cash. Maybe you don't want to call it a tax, but when inflation's 6%, your buying power 12 months from now is 6% less, and that's a lot. And so we now have added pressures, and I'm no different than anybody else trying to figure out, where do I deploy this? Where can I get stability in this cash? Where can I find a way to hedge? And it brings me all the way back into stablecoin. So I'm a huge advocate for solving this problem with stablecoin. It doesn't mean I don't want to invest in the other blockchains or the other coins or tokens or other ideas. I do, but I can't do 30% positions in mandates of any of them. That's too volatile. So these issues are not going away. The dialogue is not going to change. You're going to see a lot of discussion about this in the first and second quarter of next year. And you're right on the money to be covering this. There's no question this is going to be very important. And I think we're going to start to see some moves with the regulator very shortly, not just in the US. We opened this interview with the United Arab Emirates. We talked about Canada. We talked about Germany. We talked about Switzerland. Those regulators are all talking to each other. They're all talking to each other. If we could just agree on one stable coin between those jurisdictions, that would be huge productivity enhancement. And I anticipate that will happen.